Hey guys, welcome back to our home buying seminar here online. If we haven't met before, my name is Eric Ganoes with First Coast Heroes Real Estate, and in this video, I'm going to talk about assessing your financial readiness. So we're going to cover things from your credit score to your credit report, understanding debt to income ratios, down payment and closing costs, and then finally we're going to wrap up with the pre-approval process. So let's go ahead and get started with credit score and credit reports. Two completely different things, right guys? Credit reports is something you can download to see what's actually getting reported to the credit bureaus, and your credit score is a reflection on how well you pay money back. The importance of credit scores when you're buying a home has everything to do with your financing type. So let's say I'm looking for a conventional loan, which is a minimum of 3% down payment. The minimum credit score required for that is a 620. You're like, ugh, maybe I don't have a 620. Maybe I'm at 600. So what can I get then? So the next loan type that you'd be eligible for is what we call FHA loan. The minimum down payment with that one is 3.5%, and the minimum credit score for that one is 580. Now, if you're a veteran, thank you so much for your service. If you're active duty, if you're National Guard, there's some different requirements. We can get into that in a different series, but for this one, just understand with the VA loan, there is kind of a little bit of flexibility with your credit score. So some lending institutions will go as low as 550. I've seen some lending institutions say, hey, my minimum is 600, others are 620. So if you're a veteran that's looking for a home and your credit score is somewhere between 550 and 620, there are some options available to you. There's no real guideline provided by the VA on what the minimum is. If anybody tells you in the lending institution that the minimum credit score for their VA loan is 620, that's because that's what their policies are. That's the level of risk they are comfortable with. There are going to be other lending institutions that may feel a little bit more comfortable lending to our nation's veterans and active duty service members. You may see them go as low as 580. So definitely shop around. So there's no hard and fast on that one. And lastly, if you're getting any type of down payment assistance, so let's say you need some money for closing costs or for down payment, your minimum credit score for those programs is going to be a 640. All right, guys, to recap that, 620 for a conventional loan, 580 for an FHA loan. It's kind of flexible with the VA loan, and any type of down payment assistance program is going to be a 640. If you haven't gotten a look at your credit report in a while, go ahead and go www.annualcreditreport.com, and that way you can download a free copy of your credit report. And then before we move on to debt to income ratios, I want to give you two quick tips to get that credit score up above that threshold or whatever loan type you're looking for in order to set yourself up for success. Especially if you're anywhere between like 3 and 6 months out from the buying process, you may have plenty of time to get that credit score to where you want it. So one, pay your bills on time. That typically accounts for about 35% of your total credit score. That's not a hard and fast number right there, that 35%, but it is a good, substantial, significant chunk of your credit score. So your ability to pay back a loan is definitely the thing that gets weighed up the heaviest. The next thing is like how much credit you have, or maxing out your credit card. So let's say you have a $3,000 credit card. Try to keep that balance between 30 and 50%. So if you're showing lending institutions that if they loan you this amount of money, you're not trying to get into trouble and cap everything out. So that percentage right there is about 30% of your credit score number. So you're paying your bills on time, and then how much debt you have maxed out on these credit limits. So that equates to about 60 to about 65% of your credit score. So hopefully if you can keep your debts down and you're paying your bills on time, your credit score will go back up pretty quickly. All right, guys, let's go ahead and jump into debt to income ratios. You're going to hear people say DTI ratios, DTI. What is that? What is that? What does that mean? So DTI, again, it's your debt to income. What they're going to look at is how much money you're making per month, and then how much money is going out per month. So those are all your debts. So most lenders, what they're going to do in the initial consultation, they're going to see how much money you make per month. So for this example, let's say you're making $8,000 a month. They're going to immediately slash that in half and say, okay, I've got $4,000 to work with. Out of that $4,000, they're going to look at how much your future mortgage is going to be, and then any debts that you have. So if those two numbers are less than that $4,000, you are typically good to go. Most loan types, like conventional FHA, they're going to require no more than 43% DTI. VA is a little different. They base it off this thing called residual income, and so the numbers kind of work out a little different. I've seen VA guys get approved with 50, 55, 60% debt to income ratios, just because we are really trying to make sure the veteran can get into a home if they can. So like if they have a great credit score, they have a great ability to pay it back, they have sufficient collateral, more than likely they'll be able to get that loan. So let's talk about the DTI, just kind of a tangible example here. So let's say you're making $8,000 a month and your total debts out the door are $3,000 a month. So take $3,000 divided by $8,000, and that gives you about 37.5% on your DTI. So if you're doing conventional FHA, 37.5 is obviously less than 43%. So you should be good to go. So you get your credit score, you get your DTI, your pre-approval should be pretty good to go, pretty seamless there. So the next thing I want to cover are down payment and closing costs. So each of these loan types have different down payment requirements. So the conventional loan, we already said that the minimum down payment is 3%. For an FHA loan, it's 3.5%. And for VA loan, it's a 0% down payment. Now, down payment is different than closing costs. Closing costs are completely different. Those are around between 3 and 4% of the purchase price of the home. So let's say you're buying a $300,000 home, your closing costs are going to be anywhere in the neighborhood of $9,000 to $12,000. Inside your closing costs, you're going to have things like your prepaids for your taxes and insurance. Maybe if you bought down some points, you're going to have doc stamps, note stamps, transfer fees, all these different fees that are associated with the loan itself, that taxes and insurance. And then maybe you bought down some points. So all that stuff gets added up into your closing costs. And so just keep in mind, you got your down payment and your closing costs, two separate things. Common question I get all the time is like, hey, Eric, can I just roll in my closing costs into my loan? That way I don't have to pay them. Unfortunately, no. So you're going to have to get that money somehow. Either save that money up, that 3 to 4%, or get a gift from a family member, or maybe you're looking for a down payment assistance type program. So those are different ways to navigate that. So when you're buying a home, you're also going to have other fees throughout the home buying process. You got inspections, which we'll cover in detail in a future video. You have appraisals, which we'll also cover in a different video. But those fees are about $1,200 to $1,500, depending on how much you get on your inspections. And then you also have earnest money deposits that's real money that's going to come out of your pocket. So on average, an inspection costs about $600. On average, an appraisal costs about $600. And then on average, the earnest money is typically 1% of the purchase price. So let's use that $300,000 example again. So let's say you're buying a home for $300,000. 1% on that earnest money is going to be $3,000 plus the $1,200 with the inspections and appraisals is going to be $1,200. So $3,000 plus $1,200 is $4,200. So if you have that $4,000 saved up right out the gate, you should be pretty good to go. Your closing costs aren't due until you actually buy the home. So let's say you get to the closing table. You're going to have to wire that money, and we'll cover that in a separate video as well, what that looks like. So you'll wire all your money the night before closing, and that way you'll be ready to close. And finally, we're going to wrap up here with the pre-approval process. So pre-approvals are great. They're good anywhere between 3 and 4 months. It's an opportunity for you to know exactly how much house you can afford and then how much house you want to afford. So as you start shopping for homes, as we'll talk in a different video, when you walk through it, you're going to want to make sure like, man, absolutely love this house. This house is gorgeous. And you've got your pre-approval letter. You've already talked to your lender about your finances. You're like, man, I can actually afford this house. This is the house I want to buy. Let's go ahead and do it and make an offer, which we'll talk in a different video. And that way you're equipped. You know that you can buy that home. But let's say that you got pre-qualified. It's been 3 months, 4 months. You're like, oh my gosh, my pre-approval expired. So what happens now? So if nothing's changed, so like let's say your income hasn't changed, your debts haven't changed, it's typically a pretty easy process. You're like, hey, loan officer, I need to get my pre-approval updated. Can you help me out with that? And they typically, it may even just do a soft inquiry. It's like it won't even be a hard hit to your credit. I'll be like, okay, cool. Well, you've updated your pre-approval. You are good to go. And so don't worry about that. It shouldn't be too problem. And then finally, so let's go ahead and just talk about what do I need to start the pre-approval process. So most lenders have online applications. You'll go ahead and fill out the application. It's anywhere between 10 and 15 minutes long. Employment requirements, we get that question a lot. Like if you're FHA or VA, you're just going to need 2 years of your W-2 and a month of pay stubs. If you're a conventional buyer, it's just 1 year of W-2 and 30 days of pay stubs. So pretty easy to apply for a pre-approval, and then once you get that, you'll be good to go. So guys, that was the pretty much the assessing your financing video right there. So again, review your credit score, get a copy of your credit report, look at your DTI ratios, see where you're at. If you need to start cutting things out in order to make those certain thresholds, start doing that now. Start saving up for that down payment. Most people think they need 20% down payment in order to buy a house. It's not true. As we saw, minimums are 3% for conventional, 3.5% for FHA, and no down payment required for a VA loan. And then you have closing costs, 3 to 4%. So yeah, go ahead and start saving up all that money for your inspections, appraisals, and your closing costs. And then look into getting pre-approved. If you guys need any recommendations for lenders, we work with all kinds of lenders that offer conventional loans, FHA loans, and VA loans, and happy to connect you with any of those guys. So hopefully that helps. If you guys have any questions, please email me at hello@firstcoastheroes.com, or you can call me or text me at 904-607-7202. Thanks, and we will see you in the next video.